Hey, welcome back. It's Nolan Mathias from Mortgage 360, and today we are doing the April mortgage rate update. And some of the rates have gone up, some of them have gone down, and we're going to talk about what exactly that means for you. And we'll talk a little bit about the stress test as well that was announced yesterday. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. And don't forget about our race to 10,000 subscribers. Thank you so much to the now 4,000 people who have subscribed in the last 28 days. I appreciate each and every one of you. And I also appreciate those 3,000 that were there before, or actually it was almost 4,000 now that were there before. And if you haven't subscribed, all you have to do to possibly win your random mortgage payment for a month is click that subscribe button. It's free, it's easy, and it's definitely worth it. The definitive guide on how to manage your credit, product, penalty, price, in that order. It's never been more important to get your mortgage right. Okay, so let's get into it and let's discuss mortgage rates. Obviously, this video was delayed because of the changes to the stress test that were announced yesterday. The Office of the Superintendent of Financial Institutions, that's a mouthful, we call them OSFI, announced that they were going to increase the stress test rate on uninsured mortgages. So that is mortgages with more than 20% down. And what that means is that they're increasing the rate to 5.25% from 4.79. To put this in perspective, in the past, the banks got to basically set the stress test rate based on what their posted rates were. Going back pre-pandemic, it was around 5.29%. Basically, what's happening is OSFI is stepping in and saying, we're going back to that 5.25%-ish range for people to have to qualify when they're putting more than 20% down. Right now, this is only for people who are getting insured mortgages. It is out for proposal on May 7th, and it will probably be implemented or until May 7th. It'll probably be implemented on June 1st. We are getting more details as time goes on here. So what that means for people who are already approved, we'll find out exactly what it means. What does it mean for people who are, 12 months to 18 months out on a new build? We'll find out what that means, and we'll keep you updated in the coming weeks as we get more information. Now, before I get into interest rates and discuss where rates have gone today, I also want to talk about something else that has come up the last 3 or 4 days. For those of you who have been watching the videos and have watched till the very end, you've noticed that I've been teasing a little bit of a course that I've put together and offering a discounted rate on it. And that course was supposed to roll out yesterday officially. It's now rolling out today. And what it is it's a course designed for those who don't necessarily want to come to Mortgage 360 directly to get their mortgage, because we've had to staff up. We have a lot of people coming directly to Mortgage 360 to have us be their trusted advisor, make recommendations, and get them the best rate with the best product. But some people want to do it themselves, or they're already dealing with a broker or already dealing with a bank. And what I realized from doing these YouTube videos was that I was meeting my why. And my why, by the way, is something that I've struggled with since I was in university. I knew exactly what it was then. I lost track of that over 10 to 15 years of doing mortgages, and recently found in the last couple of years. And it's why I have this YouTube channel. And my why is to inspire people to thrive and give back, and specifically to thrive financially. And for those people who aren't coming to Mortgage 360 for their mortgage, what we're finding is that they weren't getting the same information that people that were. So what I wanted to do is put out and make it available so that people who aren't getting their mortgage through us still have the opportunity to get the information that we provide to our clients. So what we did is we put together a little course that has everything you need to know to get the lowest rate and the best product features from your bank or your broker or whoever you choose to deal with. And it has chapters on how much room there is for a bank or a broker to negotiate on their interest rates. It has chapters on what's negotiable other than interest rates. So things like appraisals, things like legal fees, those sorts of things. It has how to negotiate with your banker. And then another chapter, because negotiating with your broker is different than negotiating with your banker, on how to negotiate with your broker. It has a chapter on landmine surprises, all the things to watch out for in discount mortgages. I talk extensively about discount mortgages and what mortgages are often discount mortgages versus ones that aren't. And it's basically the full package of what a client who comes to us directly would get, but we're making it available to those who don't become clients. And here's my commitment to you. What I wanted to do was make this cost so inexpensive that virtually anybody could access it if they weren't getting their mortgage already through Mortgage 360. So we made it super inexpensive. And my commitment to you is that you will get back 10 to 20 to 30 to 40 times the cost of the course just by having the information held within. It is that valuable, and the absolute prospects of getting some savings and getting significant savings are real compared to very small price that you will pay to get the information. And if you would like to purchase that course, we have a discount code. It is YouTube, all one word, and it will get you 50% off the already discounted price. Now, my intention is to increase the price down the road, but for now, just so we can get as much of this information out there as possible to as many people as possible, we've basically put the price as low as we possibly can so that more people and as many people as possible have access to the product. So I'll put the link in the description below. Use the discount code YouTube to get an additional 50% off. And without further ado, we'll get into what you guys are looking for and what you would be looking for in that course, which is how to get the best rates and what the rates are currently. So I will split you into the rate screen here. And let's talk first about full featured rates, because full featured rates are the ones that don't come with things like bona fide sale clauses. They come with full prepayment features. These are the mortgages that we get our parents and our family and the people that we love, because we know that there's no surprises with them. And you pay a little bit more for them, usually a cup of coffee to 2 cups of coffee a week. But these are the mortgages, for the most part, we believe have the best features. If we just go through here and we start to take a look at them, let's look at insured and 35% down payment mortgages first. Now, the reason we look at these together is because these are what are considered low risk mortgages for the banks. If they're insured, the banks have very little risk. And if they are more than 35% down, that is where the math starts to make sense for a lender, where the risk of having somebody walk away from a 35% down payment is very, very, very low. So those interest rates tend to be the lowest in the market. A 5-year variable right now for a full featured mortgage is priced at 1.4%. What you'll see is when we get to the discounted rate section, that rate is actually a little bit lower. And the 5-year rate for a full featured mortgage is now at 2.09. Now, this jumped up at the beginning of March, and then it came back down a little bit as the bond market kind of chilled out. And this seems to be where the 5-year rate is settled out. Bond markets have been pretty flat the last week or two, so I suspect that we're going to stay around here for a while. And then once we get into the 20 to 35% down payment range, now keep in mind that 20% is the lowest amount of down payment that somebody will put down where a bank doesn't have insurance. So this is the riskiest mortgage for a lender, and therefore that is where the rates tend to be the highest. A 5-year variable at 20% down, for example, right now is priced at 1.5%. And then as you get towards that 35% range, you get back down to that 1.45% range. 5-year fixed is at 2.09 to 2.29. So you can see there's a bigger range there. Obviously, the more you put down, the less risk, and the more you put down on a 5-year fixed, obviously the less risk, because it's a fixed mortgage. And that is not only less risk for you from an interest rate perspective, but also less risk for the lender from an interest rate perspective. Now, getting into discounted rates, that insured and 35% down payment rate is at 1.2%. So you can see this is lower than a full featured variable. But the reason why it's lower is because it has things like no refinance clauses and lower prepayment privileges. And therefore, when it has things like lower prepayment privileges and the inability to switch to a different lender for a lower interest rate, or the inability to refinance with a lender that is not the lender that you're at, that basically ensures that that mortgage is going to be profitable for longer for the bank. So therefore, you can get a lower interest rate. So 5-year variable on a discounted mortgage, 1.2%. On a 5-year fixed, it's 1.84%. Now, circumstances where we might recommend somebody take a discount mortgage if it's a first-time home buyer, very little equity, and there's no chance that they're going to be moving to another lender for a lower rate at some point in the future. Yes, we might recommend it, but for 95% of people, a discount mortgage on a 5-year fixed especially is not a mortgage that we're going to recommend. A lot more than 5% of the population takes those, but for most people, this isn't something that you are going to want to have as a mortgage, especially if you've got a significant amount of equity. Now, when we get to 20 to 35% down payment, the 5-year variable goes up a little bit more, but you can still get a pretty discounted 5-year variable rate. The reason why the discount is higher on a discounted mortgage than it is on a non-discounted mortgage is, again, because they know that people are going to hold these mortgages for longer, and they can price that into the actual pricing here. 5-year fix at 1.84 to 2.04. Now, one thing that I always bring up, and I mention to clients, and when they go through the process with us, we tell this story. A very good friend of mine, about 8 years ago, and I went back and looked at the emails to figure out how long ago exactly this was. He was diagnosed with prostate cancer. He was told by the Foothills Medical Center in Calgary that he had 5 years to live and to put his affairs in order. And he's the type of guy who, he always gets a second opinion, as you should on your mortgage. And he flew down to the Mayo Clinic and got a second opinion from them. And he had one of the top surgeons in the world say, listen, I operate on this type of issue all of the time. And absolutely 100%, this is not only operable, but it's curable. Come down, get the surgery. We'll take care of it for you. Now, he had to refinance his house in order to have the money to go and basically pay for this $120,000 Canadian surgery. And the reason I tell this story is because he had a significant amount of equity, but if he wouldn't have had the ability to refinance because he had something like a bona fide sale clause, it would have basically forced him into having to sell his house in order to get his equity out, in order to go and get a life-saving surgery. So this is why we steer clear of discounted rates. We always bring them up, but there are things that go along with them. And life is one of those things that the unexpected happens. And people always think, who are getting a discounted mortgage, that it isn't going to happen to them. And guess what? In a lot of cases, and I hope it's not cancer, and I certainly am not suggesting that you will get cancer if you take a discount mortgage. But the problem is, in the event that something does happen, the discounted mortgages basically become the handcuffs that prevent you from being able to get out of those mortgages in a cheap way, and in a way that allows you to do the things that you may need to do. So, again, I go into this in great detail in the Secrets to Getting the Lowest Interest Rate course. I talk about it, both discounted mortgages in the discounted mortgages chapter, and I talk about it in the landmine surprises chapter that talks about all the things you should watch out for. Be cautious of it. By the way, that course, I honestly and truly believe that if you buy it, you will get 10 to 20 times back the value by knowing what's negotiable and what's not, and knowing how to get the lowest interest rate for the type of mortgage that you're getting. So I absolutely 100% believe that everyone is going to get more than 10 times, and definitely close to 20 or 30 times their money out of that course. So if you aren't getting your mortgage through us, which of course you are welcome to do, and we would love to have you as a client, by all means, that course is there to give you the ammunition you need in order to deal with the people that you're dealing with. So if you found this video useful, do me that favor, hit that subscribe button, hit that notification bell, and please hit that like button so more people like you can see this video. Don't forget about our race to 10,000 subscribers, and we'll see you on the next one.